Good morning all, CountbackTrading.org coming to you this Friday morning, December 4th. And we are looking at the last 3 days of the SPY ETF's market profile. And after that complete silliness, which transpired in M period, we are right back pretty much towards the high of the day. We're going to see that in all three of these indices. Look, we talk about M period a lot. We talk about mindless machines and non-thinkers. That headline that caused supposedly M sell-off, it shows you how much. That's why I talk about news being meaningless. If it was that bad, well, nothing changed as far as I know from when the news came out to where we closed and where we are now. So you just get these non-thinking traders and mindless machines that see a headline and cause absolute frenzy that absolutely destroy both sides of the market if you're caught up in it. Because I can basically guarantee you when M period started, most people thought we were going to take out L's high and probe to another all-time high. And then as it came in, they probably bought some more saying, okay, it's just a little sell-off. Then realized something was going on. They get out, so they get hurt on the long, and then they start joining in the frenzy on the short side, only to see them get whipsawed and hurt again as the shorts get taken out. Market does it's just like the earth cleansing itself. The market does a beautiful job of cleansing itself if you are not prepared and do not understand market-generated information. Plain and simple. And another reason why a lot of times I'll stay out of M period. Just not worth it. Especially if you had a good day, you don't want to give it back. And if you struggle throughout the day, trying to chase to get it back in M period is very dangerous. The other indices, here's the Russell. Again, same thing. They never took out the day's low. They're above their point of control. All the point of controls looked like it was going to be a downside destination. Now an upside destination. Now it's a downside right now. Again, we have 75 minutes to go. I know we have the job number coming out at 8:30. But right now they're downside destinations. They're attempting to get to their all-time high and the top of a 7-day balance now. So balance rules will apply still in the Russell. Triple Qs, they're right back at their POC. They're in a 3-day balance after making an all-time high yesterday. And the SPY on the daily, same thing. It's a 3-day balance. We come out of it to the upside. We see if we can get extension. If we come out of it to the downside, this daily gap will probably fill. Look, the month of December, I see the stat. Stats are one thing. I trade what's in front of me. I saw the stat yesterday that anytime the market's been up, I think it's 10 to 15% for the year going into the month of December, it's never had a losing December. Now, I'm not sure how many years that encompasses, how many times that's happened. Yeah, that's an impressive stat, but to me, really doesn't mean much. I trade what's in front of me. The market is very strong right now. We're up in the monthly, weekly, daily is balanced. I don't see why this grind up would not continue. We do have 3 big things on the calendar that could, for lack of a better term, upset the apple cart, and they start December 14th when the Electoral College meets, if there's any surprise there. Then Wednesday the 16th, the Fed. Again, I don't expect anything big out of them as they're just they're just going to make this market breathe a sigh of relief every time and be there to backstop it. I think the one that could cause some pretty good volatility is Tesla being added into the index. So that Friday the 18th, a quad expiration and ex-dividend for SPY. And then that Monday, Tesla gets added in, and Tesla's weight in the index is going to be the largest. So it's going to be very interesting. That one might be the one that causes the most volatility. But aside from those 3 things, this market, I still see it just grinding upwards for the remainder of this year. So, destinations for this morning. Well, I was the price probe, price spike, right now firmly being rejected. Then we had 10Y to the upside. That was C's low of 367.47. Well, we're right above there. So if we open above it, it becomes a downside. If we open below it, it still stays an upside destination. But until we trade at it, it's still a destination one way or the other. And then 368.19, all-time high yesterday. Right now, 367.96 is our pre-market high. For the downside, again, if we open above the POC, it becomes a downside. If it does not, we don't have anything to 366.25, which is the overnight low. Then yesterday's low, 365.50, 365.49. So even though these things went nuts yesterday, right? Look at the visual spot it stopped at. So you definitely, we did 18 million shares. Think about that. The volume on the day was horrendous before M period. We did over 18 million shares, and a lot of it was just chopping both longs and shorts up, and still stopped at incredibly visual points, a penny above the afternoon pullback from the second. And then 364.20 daily low, and filling the daily gap at 363.12. What's the game plan? Well, you know how I feel about M period the following day. Well, boy, oh boy, unless we take out yesterday's high, we are going to spend an incredible amount of time with huge chop inside of yesterday's range because of M's range. Plain and simple. So if we take out the previous day's high, yesterday's high, and get acceptance above it, and I think to get acceptance above it, we're going to need to go trend. Otherwise, we're just going to battle inside of M's range all day yesterday. That's what happens after the algorithms get agitated like they did. Now they're going to have to find their way today. So I expect major, and I mean major chop this morning. So can I give you a game plan? Can I tell you I want to be long here or short here? Not necessarily. Possibly the one trade I would look at is because they have a lot of times, hard time taking out the previous day's high. If we're to trade up to around LRM's high, I would take a put play. Now, value will be at least overlapping to high, if not higher, if that's the case. If we take out the day's high from yesterday and get acceleration, I'm out. But if we just take it out and come right back in, I'll hold on to it. So that's one possible early play. No call play. Now, again, we have the job number coming out in 10 minutes. If that totally distorts what's happening here, if it rips the market down, for argument's sake, if for whatever reason they open below eyes low in the next hour, I will be a short player. For two reasons. That's where change took place, where we spiked and probed from. And number two, it's right at value low. So if we open below eye, again, I would take a short play. I'd be out if we get back inside value, back inside eyes range. So those are two short plays, one down here and one possibly towards the high. A call play, again, in the next hour. If by some chance we gap higher, well, then I would be a long player, depending on the size of the gap, and I'd be out if the gap fills. So those are those are a couple of early plays. Most likely I'll be waiting for more market-generated information to form in the initial balance because I do expect some major chop. And then on the chart, just going to show you the daily, and then tonight we'll go over all three of them to recap the week. Again, we talk about it. It's pretty basic. It's a 3-day balance. We get above the balance. We see what kind of extension we get. Yesterday, we got above the 2-day balance, but we weren't getting much extension. We kept coming back into the previous 2 days range. So as a buyer, you want not only to take out yesterday's high, but get distance away from it. If you do, we come out of balance, and all three time frames are up. If you just stretch it, you're back in balance. On the flip side, if you take out Wednesday's low, if you don't get so what's acceptance? For me, acceptance would be to fill that daily gap and close below 364.38. That would be acceptance out of a 3-day balance to the downside. Even though one day doesn't make a market, if you close this gap and close inside of here, you have to be a little wary as a buyer. Anybody long these 3 days are going to be very nervous if that's the case. But if you come out of the 3-day balance to the downside, say we flush, say we fill the gap and then snap right back into the 3-day balance, then all you did was shake out week longs from these 3 days, but we're right back in balance. Market-generated information. Good luck trading today. Have a great day, and we'll recap the day and the week at 4 p.m.